Welcome to This Week in Crypto from K33 Research on June 5th, 2026. Today, we'll cover a critical vulnerability discovered in Zcash, a security flaw identified in a chip used in the Trezor Safe 7 hardware wallet, new comments from US Treasury Secretary Scott Bessent, and the market reaction to Strategy's sale of 32 Bitcoin. Let's begin with a story that raised concerns about security in one of crypto's longest-running privacy networks. A critical vulnerability was discovered in Zcash's orchard-shielded transaction pool. The flaw could have allowed attackers to create unlimited counterfeit ZEC and was identified by a security researcher with assistance from Anthropic's Opus 4.8 AI model. The issue was reported on May 29th and patched by June 1st. Following disclosure of the vulnerability, ZEC fell 31% in just 24 hours. Although the bug had existed since 2022 and was confirmed to be exploitable in testing environments, the Zcash team believes real-world exploitation is unlikely. Shielded Labs stated that there is no evidence counterfeit coins were ever created and is exploring upgrades that would allow users to independently verify the integrity of the Zcash supply. For now, the vulnerability appears to have been contained, but the episode highlights both the risks that can exist in privacy-focused systems and the growing role AI tools may play in security research. Another security-related story emerged from the hardware wallet sector. Ledger's Donjon security team disclosed a vulnerability in the Tropic 01 chip used in the Trezor Safe 7. According to the findings, a highly skilled attacker with physical access and specialized laboratory equipment could potentially bypass firmware verification and execute unauthorized code. Trezor responded by emphasizing that user funds were never at risk because private keys, wallet backups, and PIN protections are secured across multiple independent components. Chip manufacturer Tropic Square has already issued mitigations and is developing a hardened chip revision expected in late 2026. The key takeaway is that while the vulnerability attracted attention, neither Ledger nor Trezor believe it created a realistic threat to customer funds. Let's move from security to regulation, where several developments out of Washington attracted attention this week. Speaking at the Reagan National Economic Forum, US Treasury Secretary Scott Bessent said the United States has seized roughly $1 billion in cryptocurrency linked to Iran. According to Bessent, the funds were tied to sanctions evasion, and authorities had taken direct control of the associated wallets. He also reiterated that confiscated digital assets, including Bitcoin, could potentially be added to the US Strategic Digital Asset Reserve. Bessent also urged Congress to pass the Clarity Act this summer. He argued that clear federal rules are needed to bring digital asset activity back to the United States, improve custody standards, and strengthen the country's position as a global center for crypto innovation. During the same Senate Finance Committee hearing, Bessent said the Treasury Department continues to work on the strategic Bitcoin reserve established earlier under the Trump administration. While describing the effort as complex, he said officials are moving deliberately to ensure the reserve is built on durable and long-lasting foundations. Elsewhere, CME's new 24/7 crypto derivatives market recorded $50 million in trading volume during its opening weekend. White House crypto advisor Bo Hines also defended the Clarity Act, describing it as pro-law enforcement as lawmakers continue efforts to advance the legislation. Taken together, these developments suggest that crypto policy and market structure legislation remain high priorities in Washington, while work on the strategic Bitcoin reserve continues in the background. Finally, let's turn to the story that generated the most debate this week: Strategy's sale of 32 Bitcoin. The transaction took place between May 26th and May 31st and was worth approximately $2.5 million at an average price of $77,000 per Bitcoin. Following the sale, Strategy's holdings stood at just under 844,000 Bitcoin. In practical terms, the transaction was tiny. It represented less than 0.004% of the company's Bitcoin treasury. However, it marked Strategy's first net Bitcoin sale since December 2022, making it noteworthy despite its small size. Strategy stated that proceeds from the sale would be used to fund distributions on its preferred stock offerings. Earlier this year, management had already indicated that Bitcoin sales could be used when appropriate to support dividend obligations. The market reaction focused less on the 32 Bitcoin sold and more on what the transaction might signal about Strategy's broader financing model. Critics saw the sale as evidence that the company's growing preferred stock obligations are becoming more significant. Attention also focused on Strategy's reduced cash reserves after retiring $1.38 billion of convertible debt earlier this year. Some investors interpreted the sale as a sign that the company's financing options may have become less flexible than in previous years. Others strongly disagreed. They pointed out that Strategy still maintains substantial liquidity, significant equity issuance capacity, and no immediate debt maturities that would force asset sales. From that perspective, the sale represented routine treasury management rather than financial stress. The debate ultimately wasn't about 32 Bitcoin. It was about whether the transaction signals any broader evolution in Strategy's long-term operating model. The disclosure also sparked controversy on Polymarket. A market asking whether Strategy would sell Bitcoin before May 31st attracted more than $20 million in trading volume. Although the company later confirmed that the sale occurred before the deadline, that information was not publicly disclosed until June 1st. Ultimately, UMA token holders upheld a no resolution based on Polymarket's interpretation that confirmation outside the market's timeframe did not qualify. The episode highlighted a recurring challenge for prediction markets, where traders may correctly forecast an event yet still lose if resolution depends on disclosure timing, oracle interpretation, or later clarification. And that's all for this week's edition of This Week in Crypto. Thank you for listening, and we'll be back next week with another update from across the digital asset industry.